Good afternoon, everyone, and welcome to the 3 p.m. Budget and Finance Committee meeting for the City of Franklin. We will call the meeting to order with a roll call vote. Alderman Peterson, how do you vote?
Present.
Alderman Potts, Alderman Potts, how do you vote?
Present.
And Alderman Baggett, how do you vote?
Present.
And the chair votes present. Second item on the agenda is consideration of approval of minutes. Hope everyone's had a chance to look at those. Any corrections, deletions? If not, I'll entertain a motion for the minutes.
Motion to approve the minutes.
Proper motion and a second.
Second.
Let's do a roll call vote. Alderman Peterson, how do you vote?
Yes.
Alderman Baggett, how do you vote?
Yes.
Alderman Potts, how do you vote?
Yes.
And the chair votes yes. Let's go to new business then. Consideration of Resolution 2022-81, a resolution to revise the organizational chart for the Facilities Department. Who is representing that? Michael?
Mr. Chairman, thank you. Good afternoon, Budget and Finance Committee. Michael Walters-Young, your Budget and Strategic Innovation Manager. The next three items will be budget-related. Two are organizational chart changes, and one, Eric will be introducing to you proposed budget goals for next budget year, fiscal 24, on the same day that we talk about the last budget year, fiscal 22. This first item is a very, very short one. We are simply requesting the ability to amend the budget to go from 2 facilities maintenance workers, as you see on the screen and in your packet, to 3. There is no change in grade. There is thus no monetary change in the facilities management department. Christine?
And I do support this division. I just wanted to mention that we did have a retirement of a custodian position and a critical position, and that retirement, there is no change in the number of positions within the facilities area. It would just be changing the custodian position to a facilities maintenance worker who could be able to kind of broaden some of the skill set for the needs, but those are both in pay grade D.
Any questions from the committee? Then I will entertain a motion to approve and forward to the full board and/or workshop, whichever one is relevant.
If this committee concurs unanimously, we would typically put this on the consent agenda.
Okay.
There is no financial impact because it's the same pay grade.
It's a one-vote
All right.
org chart change.
Mr. Chair, I will move for approval to be placed on the consent agenda at the next meeting.
Proper motion, is there a second?
Second.
Let's do a roll call vote. Alderman Peterson, how do you vote?
Yes.
Alderman Potts, how do you vote?
Yes.
And Alderman Baggett, how do you vote?
Yes.
And the chair votes yes. All right, let's go to item 3 then, which is consideration of Resolution 2022-74, a resolution to create an organizational chart for the Transit Fund.
So this is a situation where we're adding a part-time position to assist the Franklin Transit Authority Board in their work and their contract compliance and oversight in the administration and operation overall of our transit system, which is operated by a third party, the TMA Group. So this provides sort of a separation component on that and a distinct oversight that is a city employee reporting to the FTA board and helping assist them with contract compliance and general oversight. This is an outgrowth of a review that took place earlier this year by the Federal Transit Administration, and they identified some key components in terms of organizational oversight and structure. And the key kind of takeaway and corrective action was to create an independent position to help provide that review and oversight for the separate Franklin Transit Board, separate from the TMA Group and their board and their operations. So having that separation, having that dedicated person who is in this case, ultimately a city employee. The Federal Transit, I think, was indifferent out as to whether it was directly a city employee or an employee of Franklin Transit, but since Franklin Transit doesn't have any employees, it made more sense to pull off of the city's structure and ability to support an employee. It also, I think, helps create a good connection to our finance team and to our city team overall if they need help, support, guidance on anything along the way. So this is a key component to providing that follow-up and what was identified as some key improvements going forward. So we would put this in place. We have identified a candidate for this position, and so we would ask that this be reviewed by the committee today and then sent to the board for approval at the December 13th meeting. And I don't know if Christine or Mike or Michael want to add anything else. They've all touched this in one form or another as we've made this mid-year adjustment in the budget. We're very confident the part-time position does not create any issues budgetarily, easily accommodated within that budget, which is a combination of money coming to the federal government and the city's support as well. So, anything else you want?
Any questions? Then I will entertain a motion to approve Resolution 2022-74.
Motion to approve the resolution?
Proper motions, are a second?
Second?
Let's do a roll call vote on that item. Alderman Peterson, how do you vote?
Yes.
Alderman Potts, how do you vote?
Yes.
Alderman Baggett, how do you vote?
Yes.
And the chair votes yes on that. So that passes. Item 4, consideration of Resolution 2022-75, a resolution of the Board of Mayor and Aldermen for the City of Franklin adopting budget goals for the fiscal year 2023-2024. Eric?
As Michael referenced, budget season is here. It's not just Christmas time. It is the start of the 2024 budget process. And the way we start that off is with our budget goals. And we provide those to you for consideration and feedback, and then would ask to again, send that on to the full board for their consideration and feedback as well. This is a similar structure we've used for the last several years. We do have certain financial goals that are really timeless. They transcend an annual budget, and we identify those, and those are kind of key principles in terms of having a structurally balanced budget, supporting your policies, whether it be the debt policies or reserve policies. All those elements are complied with, and that we are leveraging local funds with other grant opportunities and state dollars as well. We also look at non-financial goals in terms of being highly competitive in terms of economic development opportunities, providing high-quality services to the community, supporting the implementation of our 5-year capital investment programs and working to deliver projects that have been identified there. Also, within our water and wastewater systems, both the larger capital projects, but also what we call rate-funded or operational type of capital projects that maintain our infrastructure, especially those in some of the older parts of town there as well. Within the 24 goals, we look at continuing to look at ways to support and look at affordable and workforce housing options in our community. The Hill Project is moving forward, and we talked a little bit about that at the last board meeting, that continues to work, and we look to have a development agreement to the board early in 2023. We also, and that implementation will start in this fiscal year, we hope, in terms of continuing to develop that plan and have that move forward. We want to have a budget that is supportive and consistent with a lot of our long-term plans, whether it's in transportation, water, parks, land use, and of course, Envision Franklin is going through the update that had been identified and anticipated leading into this year, and that update reflects our experience with the plan, our aspirations for the community, and a good, solid stewardship of our resources, both in the built environment and the natural environment. We also touch on key elements in terms of continuing to have high-quality workforce, a diversified workforce that provides those high-quality services, and that we're highly competitive as an employer in our region. One of the things we're working on moving into the end part of this year and into next year is looking at surveying our employees and looking at how their level of engagement and satisfaction in the work environment, and how can we continue to build and improve that and be a truly preferred employer in our community and in the broader region. We want to continue to be highly competitive in the economic development sphere. We've been very successful last year plus, had 5 corporate headquarters relocate to Franklin and bring significant jobs and investment there. We want to continue to build on that. We talk about measuring our success through performance measures. The city has taken on a lead role in the state in benchmarking other cities across our state, as well as the elements that you've identified or we've identified through our budget and many previous years to carry that through. You know, we will also see movement forward along with Envision Franklin on the update of the countywide growth plan. I think we will see that move forward. The last year, I think there was some additional review, not a lot of adjustment on our front, but I think a couple other communities in the county made some adjustments there, and I believe that's ready to move forward as we move into the new year as well. I'll stop there and take any questions, or if there's anything that you would like to see more focus placed on within this, we are glad to hear it, and this is kind of our starting point. So please let us know what thoughts and feedback you have, and like I said, our goal is to get some feedback from the full board, and then this becomes sort of sets the framework for us moving forward into our budget process in the early part of the new calendar year. So I don't know if Michael want to add anything to that, and we'll take any questions you have.
Any questions?
Mr. Chair, I have one. And Eric, I'm sure you can just expand on this just a little bit, but on page 3, where we look at specific fiscal year 2024 initiatives, the first one there is listed as work towards the development of incentives and strategies for affordable workforce housing in the city of Franklin. And again, this is a multi-page document. I may have overlooked it for 2023, but do we have a goal tied to that for 2023? And I'm asking since I serve on the Housing Commission.
Well, we've done a couple things. Obviously, we work really closely with the Housing Authority on some of their projects, and if you look at what we've done to help support that, we put dollars, and specifically some American Rescue Plan dollars, into supporting some infrastructure that helps with, I think, 4 of their affordable projects. But we have also included some dollars generally in the budget to have some capacity to support a pilot program or a suggestion. Michael, I don't remember the number. I think it was around $100,000 that we've
It's been
carried.
$100,000 for the last 4 or 5 fiscal years.
Yeah, we put that there to just be available if there are ideas that need some financial support. So we have maintained that support as well. Like I said, we used American Rescue Plan dollars. We've also looked at CDBG funding opportunities. So all those are kind of elements that we look at what the city can do, what the city can do in partnership with other entities that are working to deliver those kind of projects. And of course, now that the Hill is a specific project that has city-owned property, moving into working with a development partnership with 4 other local nonprofits, which is a unique opportunity to not just build those homes, but build capacity and build on that relationship and partnership that hopefully could be helpful in other places and other projects in the future. So I think it's envisioned a lot of it to be a continuation of what we've been doing and building, but there's also, we always try to provide a little bit of capacity to take advantage of other opportunities that may come our way. So that's what this speaks to, is continuing to build on that.
Good. I appreciate you sharing that. That's one of the things as we look at, I'll say Ward 3, and along that interstate corridor there, and all the development that's occurring right there. And so I know that we're watching the Hill District right now and the success that we'll have there, but specifically looking at those growth opportunities across all of Franklin. But I know that as we go through Goose Creek study, as well as Envision Franklin, that I definitely want us to put our best foot forward when it comes to that. And I know that we have and will continue to do that.
It is a challenge, as we know, but one we want to keep talking about and look at where there are opportunities.
Thank you.
I do have one.
Go ahead.
Mr. Chair, on the page, what's the page number? The second page of the actual goals, and it's the I'm glad to see that, maybe it's the third, it's the specific fiscal year 2024 initiatives. And I think that, and Alderman Potts mentioned, but we've got this kind of, with Envision Franklin comes kind of the refresh, comes these other plans. So support cities' operational efforts, long-term planning initiatives. I think making sure that we prioritize, and I know also our planning, when you do a plan revision like this, all the other plans that have to be updated based on that. So just making sure that we have the support in our budget for staff to see those, through outside consultants and whatnot. I mean, doing what we need to do to get that new Envision Franklin kind of spread through, matriculating through all of our plans. That the quicker the better. And I know you all know that. I'm telling Noah about the flood here, but it's just that's going to be very important because there's going to be so many great things I think that come out of this Envision Franklin refresh, and because our community's changed so much since 2017 even. And I look forward to supporting staff with whatever they need to get the other plans updated.
And that's an important question that we need to keep asking as we go through, because it's great to have long-term plans, but if your kind of operational budget doesn't facilitate you supporting it and moving forward with what's needed, then you're really working against yourself, or you're not making the progress you should. So that's kind of what that gets at, is let's make sure we're thinking through what are the operational components that help support the long-term planning efforts and implementation needs.
Any other questions, Ann?
I was just going to say, I noticed that it says lessons learned
Yes.
from implementing
Yeah.
the plan.
That is always part of that, and, we've lived with it for the better part of 5 years. What have we learned from living with it? What can be improved? What are things that are missing? What are things that work well that we can build off of? All of those are good questions to ask, and I'll fix the typo in there too.
Then I have a couple of follow-ups.
Yes.
One of and this is related to the Hill project. We're still on tap for, I don't remember what it was now, 500-something thousand from them, with us giving up 700-something thousand in value.
Yeah, I mean, that's part of what will be proposed through that. And what we shared with them is, at least what we got was a general understanding from at least most of the board that at a minimum, we wanted to see that reimbursement to the water utility for the portion
Exactly.
they own of that land, because it's a mix of general and the utility. So that needed to be, the utility needed to be kept whole. And so that's understood. They may make a proposal at how that may be paid over maybe a couple payments as they're looking to work through financing and those needs. We've left that open for them to propose on. That hasn't been totally resolved, but that at a minimum, it was stated as, that's what the board's expecting, to at least see that part happen. So that's part of that.
And just to get into a little bit, when the IWRP, did you get a chance to look at that comment from Monday night when the gentleman got up and said that the IW, whatever it was, said that we didn't need more than 12 million gallons?
Yeah, that's an appendix, so we're going back through a CDM, we've asked them, but that's from an appendix.
So, yeah.
We're not that far away from that number
Right.
today, so it doesn't jive with a
Let's get-
2040
yeah,
timeframe,
yeah,
so
let's get that
yeah.
corrected.
I tried to look at that a little bit.
It certainly isn't something that was in the actual plan. It's from an appendix that describes some modeling, but we're talking to CDM Smith, who helped lead that process, to make sure we're going back through that, understanding something like that, but also updating some of those assumptions based on what's really happened in the last 10 years, and then playing that forward, both on the capacity and service demand in the system, as well as just what we've seen, development, density, where development is happening. We all know we've annexed about 1,000 acres in the southeast that was not in that planning at that time. And so all those elements, and then there are other areas that have dropped off or are dropping off with what we anticipate in the updated urban growth boundaries. So there's push and pull. Some of that work's already underway, but CDM Smith was really involved in that IWRP component, and Hazen's doing it from a little different angle, but we're really looking at how to bring those both together and refresh some of those elements and make sure that plan's reflecting what's happening today and what our best projections are in the future now.
Any other, go ahead.
Thank you. Eric, would you just do, everyone who might be watching right now, would you just remind everybody how they could go in, and we're looking right now, these are going to be, these are 2024 goals that we're looking at, but if we wanted to look at the success of, say, 2022, where they might be able to get I call it a stoplight check of, red, yellow, and green success on achieving the goals?
Well, we provide feedback in the budget document related to performance measures. You've also got the open source kind of website where you can go in and look at and what was the goal and how do we do achieving it. Michael may want to speak to that some. The last 2 years, in the past, I've sort of highlighted some key things within the budget letter related to some of the strategic, specific budget goals. Haven't done that as much the last 2 years because we were dealing with some very specific issues related to COVID and changes in recovery with that, and put a focus on what the path forward was out of that very unique impact on our community and our world. Michael, I don't know if there may be some other good places to suggest. We give multiple opportunities.
So we are actively working to try to increase the amount of accessibility and transparency, especially in the budgeting and performance measurement side of our operations. The first place to go to is performance.franklintn.gov. That is the online home of your strategic plan. And that is the place where you can go and actually click in and see how we're doing. We are actively getting final fiscal 22 performance measures to add to the fiscal 24 budget. Once we do, we will go back and update the performance measurement site with those. So you'll have, in some cases, 10 full years of performance measurement data to see how effective you are on that plan. The second thing we are working on, and we will eventually get out, is an updated and actually full print document that you could review that shows the performance over the 5 or 10 years that we have the applicable data for. That will be delayed until spring of 2023, simply because, here's a plug, the Franklin Citizen Survey is open and available for anyone in the city to currently go to. You can check out our website as well as our social media streams, and we encourage anyone that didn't get a formal card to go and take the survey. That will be available through December 16th. And then that information will get collated by our vendor, and we expect to have that data available and presented back to the board sometime in late winter, early spring, and fully integrated into the fiscal 24 budget. So you'll see 3 surveys worth of data, 16, 19, 22. The third is we have a new budget software with a new vendor. We will be working to integrate that as we go. We are doing the budget in it for the first time right now, and the May budget document will both be available in print and fully online with access to the data behind it. And that's the first time that we'll be able to do that. How exactly that will be available during committee review, we're still working on it. But the materials will look slightly different, but pretty much stay the same, but have much greater ability to kind of literally click in, as opposed to now, we think we've got a great budget document. We know that we get awards for it, but it's a very beautiful, static 498 pages. And it might be time to enable you to be able to click and actually have it do something.
Perfect. Yes. Thank you very much.
Any other questions on the goals outlined by City Administrator Stuckey? Then if not, let's go to item 5, which is report of the...
Do we need to vote on it?
It is a resolution, isn't it? All right, well, let's do a resolution. Let's do a vote.
Mr. Chair, I'll make a motion to approve item number 4, resolution 2022-75.
Proper motion to a second.
Second.
Let's do a roll call vote. Alderman Peterson, how do you vote?
Yes.
Alderman Potts, how do you vote?
Yes.
Alderman Baggett, how do you vote?
Yes.
And the chair votes yes on that. All right, now, let's go to report of the city's external auditor, Crosland PLLC, and presentation of the fiscal year 2022 annual comprehensive financial report. Christine, do you want to lead that out?
I would. Thank you very much, Mr. Chair. One of the things that is there's many important tasks of this committee, but there's no task that's any more important for this committee than hearing directly the report of our external auditor and hearing her comments directly, being able to know who she is, and certainly understanding her perspective of the internal controls and of the city's finances for the audit that has been performed. It is a requirement in the state of Tennessee that all cities must be audited by an external auditor that is approved by the state. And then once the audit has been prepared, it is submitted to the state by December 31st of every year for the fiscal year that ended in June. That is a state requirement that we fulfill every year. And then it is also, again, reviewed by an internal state auditor. So that's a high level of the process. But certainly, we've spent the last 5 months working to close the books in accordance with generally accepted accounting principles, as well as go through audit field work with our auditors actually being present on site here at City Hall, follow-up questions and dialogue going back and forth, and preparing the document that's in draft form, but that we are very close to being finished with, that's in front of you. Before Jennifer Mantronock from Crossland is here to give a presentation to you, certainly I would like to give a big thanks and acknowledge the folks that I support that on a daily basis provide the accounting internal controls function for the city of Franklin. Our audit process is led by our comptroller, Mike Lowe. Also, and Mike Lowe on a daily basis leads a fantastic staff. Margaret Wilson is with us. I want to also acknowledge this is a great team that we have with us in the boardroom today. We have Caleb Smith, we have Angela Sparkman, and we have Dawn Davenport. We have Michael Walters Young is with us, and we have
Don
Dawn Wildrick. I am very sorry. I looked right at her and called the wrong last name, but Dawn Wildrick. We're very glad that is all my errand. She and I spent a good part of the afternoon together, so that's even a mistake on my part. But I am very thankful to support this team, and we are we don't take for granted how much it goes into providing the type of accounting leadership and following of the regulations that we are required to do so. So with that, I'll introduce Jennifer Matternock from Crossland, who is the audit principal, and she will explain more of her role as well as give her report to you.
Good afternoon, everyone. Thank you for having me here. I just want to say I 100% agree with Christine's comments about the staff. They are A+, wonderful to work with. So just want you all to know that. Earlier in the summer, I was here to present our audit plan to you, and we have now completed our audit, and I have the results in front of us. We didn't have any changes from our audit plan, which is good. Our scope remained the same, and our initial risk assessment remained the same as well. I'll start on page 2 on our results book. At the top, it says report on results of the 22 fiscal year audit. We have completed our audit. The draft that sits in front of you has an unmodified opinion within it. Unmodified opinion is a clean opinion, which is the best opinion you can receive during an audit. As Christine stated, the state of Tennessee has oversight responsibility and has approved our audit engagement through the comptroller's office. The city will meet the deadlines of the federal and state governments as well as the GFOA Certificate of Achievement Program. A few of our communications here, not only am I reporting your results, but some of these communications we're required to communicate to you annually. That's why, if you were here last year, why you're hearing these again. And overall, it was a very good audit and clean, so nothing in here should be a surprise. Independence, we have certain rules we need to follow under both the AICPA and the government auditing standards, and we are independent with respect to the city. Our engagement personnel that worked on your audit is listed here at the bottom of page 2. Moving on to page 3, as your auditors, we have certain responsibilities that we are required to perform under U.S. Generally Accepted Auditing Standards, government audit standards, as well as the uniform guidance. And we have fulfilled those responsibilities. The main responsibility is to provide an opinion based on our audit, which we have done. Our audit is based on planning, reviewing internal controls, preparing a risk assessment, and based on our tests is how we form our opinion. Management judgments and accounting estimates. There are significant accounting estimates that are reflected in the financial statements. I've listed the most significant ones here. We do look at these during our audit. We're looking at the assumptions that are going into making these estimates. We test them if possible, look at how the results compared to the previous year, and we have concluded that they are reasonable. The significant accounting policies in the financial statements are included in Note 1. We look at these every year as well, and we believe the significant accounting policies are both appropriate and comprehensive under U.S. GAAP. Audit adjustments, we had no audit adjustments and we had no past adjustments during our audit. The financial statements are very clean when we audit those, so that's kudos to management for keeping your financial statements clean. We also performed an audit of the Cool Springs Conference Center. We did propose some audit adjustments, and I've included those for you in Appendix A for your review. And those adjustments have been recorded by the management of the Cool Springs Conference Center, and in the financial statements that I will present, they are included within those. We had no discussions with management regarding alternative accounting treatments. All the transactions, there's authoritative guidance within U.S. GAAP. We're not aware of any management consultations with other independent accountants. You're certainly welcome to get a second opinion if you would like. We had no disagreements with management. We had no difficulties encountered in performing our audit. They're a joy to work with. They give us everything timely. Everything's available to us when we show up. They're just wonderful to work with. Any issues discussed prior to our retention as your auditors were not a condition to our retention. And we are not aware of any fraud or illegal acts, and none were brought to our attention by management or the board. The annual comprehensive financial report in front of you, it does contain other information that is not audited. That includes the MD&A and some of the required supplementary information. We do look at this, although we don't audit the information, we do look at it, compare it to the financial statements and other information that we have gathered during the audit, and we don't know of any material changes that need to be made to it. In the middle of page 7 is our areas of audit emphasis. These are areas that we have identified based on our risk assessment. Other procedures performed, a uniform guidance audit, which is also a single audit. It's based on the federal awards. The total federal programs for the city, the expenditures for '22 were $15,397,000. We tested 2 major grant programs as part of our single audit, the American Rescue Plan Act and the Federal Transit Cluster. And I'll point out our summary of results in that when I get to the ACFR. We reported no material weaknesses, no significant deficiencies, and we did have 1 compliance requirement that we did report a finding on. Recent accounting pronouncements are on page 8. GASB number 91, conduit debt obligations. This is applicable next year for the city. This is going to improve some of the footnotes related to conduit debt obligations. We don't expect any changes to how any of the debt is recorded. GASB number 94, public-private, and public-public partnerships and available payment arrangements is also applicable next year, as well as GASB 96 subscription-based information technology arrangements. We don't feel that this will have a significant impact on the city's financials. Included in Appendix B is the management representation letter, which we have submitted to the city, and they have signed and returned it. That's presented in Appendix B. The management is stating that they feel that the financial statements are materially stated, and they've provided us with all the relevant information to provide our audit. In conjunction with our audit of the city, we also performed an audit of the Cool Springs Conference Center, and I do have those financial statements with me as well. We did also provide an unmodified opinion on those financial statements. And included in Appendix C is their management representation letter, and they are representing basically the same thing in their letter. Any questions on the results? Okay, I'll move on to the annual comprehensive financial report for the city. I do want to point out, and I think this is Roman numeral 7, the Certificate of Achievement for Excellence in Financial Reporting. The city was awarded that again for 2021, and I believe that's 31 years in a row. 31 years in a row, so that's fantastic. Management does prepare these financial statements. We do not do that on their behalf, and they do an excellent job of preparing those. So, good job. The GFOA does, when they send their certificate, they have a few comments for improvement in the financial statements, and we have implemented those comments in these financials. On page 3 is the first page of our auditor's opinion. As I stated before, our opinion is unmodified. There were some new audit standards that came out and were applicable in 2022, which changed how the letter looks. And I just wanted to point out those changes to you. The biggest change is they included the opinion, first page, first paragraph, which used to be kind of hidden on the third page. I personally think that's a great addition to it. It's why you hire us. It's why we're doing the audit. So I think putting it front and center is more clear and provides the opinion right away. Below that is responsibilities of management for the financial statements. And then there's some information regarding the auditor's responsibilities for the financial statements. They did expand that section a little bit, and I think it makes it a little more clear what our responsibilities are. On page 9 is the management discussion and analysis. This analysis complements the financial statements. It provides more information that's not in the financial statements or included in the footnotes. It gives a lot of relevant information about what happened during the current year, as well as what's going to be happening in the forthcoming year. A few things I did want to point out from the MD&A in the financial highlights. The net position, which that's in the government-wide financial statements. The ending net position was $983 million compared to $928 in 2021. Of that amount, $123 million is unrestricted, which means it may be used to meet the government's ongoing obligations to citizens and creditors, which is excellent. Fund balances, at the close of the fiscal year, the fund balances reported combined ending fund balance of $170 million compared to just under $154 million in the prior year. The increase of $16 million was due to several reasons. Increases in your taxes, your local taxes, the shared taxes. There was an additional 0.5% increase in the sales taxes, and 2022 was the first year that you collected a full year of those, so that increased the tax collections there. And also, there's an increase in COVID-related grants. On the expenditure side, there are fewer capital expenditures due to supply availability. So that resulted in a positive increase of 16 million. Quite a bit of that increase is in your general fund. And also, there was some increases seen in the State Street Fund as well as the hotel motel funds, particularly in the tax section with the recovery from COVID. In capital assets, the cities continue to work on several infrastructure projects. These include bridge replacement, signal technology, trails, park, water and sewer improvements, and wastewater plant improvements. There's a full list of those on page 16 if you want to look at that. And in the debt, in the governmental activities, there was no new debt issued. However, in the business type activities, which is your water and sewer fund, there was just under 23 million in new bonds issued. And for both activities, a total of 17 million in repayments were made. So that gives a really good overview of your year. On page 20 and 21 is your statement of net position. This is the full GAAP accrual balance sheet. And it's broken out by your governmental activities and your business type activities. You probably only see the statement once a year when I present it to you. You're probably used to seeing the fund financial statements. This statement includes, the difference between this and the fund financial statements is primarily your long-term assets and liabilities. So the capital assets, your long-term debt, and your pension and your OPEB obligations. And to point out the pension in the OPEB, on page 21, right under total liabilities, the OPEB increased slightly from 22.1 to 22.7 million. And in the net pension liability, that liability for 22 is the closed plan. For 21, it's both plans. That decreased significantly from 28.5 to 16.5 million. A lot of that with the actuarial assumptions, and when they compare them to actual, the largest change was in the investment activity, investment gains and losses, so that's why that liability decreased. And in the TCRS, it's actually overfunded, so it's in an asset position, and it's in the middle of your assets on page 20. Net pension assets, 258,000. In the net position, total net position is 983 million, and right above that, in the unrestricted, is the 123. On the next page, on page 23, is your statement of activities. This is also on the full accrual basis. Your change in net position was 54.7 million for the year. That's for both governmental and business type activities. And that includes 10.4 million from the water and sewer fund, and then 44 from the governmental activities. And that's compared to 41 million in the previous year. A couple lines below that is a prior period adjustment. There was a new lease standard that was implemented in 2022, and that prior period adjustment is related to that lease implementation. And those, for the leases, the city is the lessor on 2 leases, one on the 5 Points building and on Harlansdale, and those are included into your assets. They're included in receivables. It's about $500,000 approximately. On page 24 is your fund financial statements. The balance sheet for your funds, for your governmental funds, is on page 24. Total fund balance for governmental was 170 million compared to 153 in the prior year. Also, I want to point out the other governmental funds. Those are your non-major funds. If you want to see those broken out by each fund, that's on page 92. And on page 26 and 27 is a statement of revenues, expenditures, and changes in fund balance. In the revenues for taxes, you can see total tax revenue of 84.6 compared to 67.8 in the prior year. Also, your hotel motel tax increased. And the license and permits, so your revenue is increasing as the economy is recovering from COVID. Also, there's a line item for grants, 7.8 million compared to 6 million in the prior year. I also want to point out in the use of money and property, this is your change in your investment values. In 21, it was a positive 435,000. At June 30, 2022, the market was down. This is a point of time. So at June 30, 22, the market declined, and so you have a loss at June 30, 2022 of 1.8 million. However, that's expected to be temporary. Those investments are held to maturity, and that loss is expected to be recovered. Total changes in net fund balance is on page 27, that's 16.4 million compared to 7 million in 21. So good year for the city. On pages 25 and 29 reconciles the fund financial statements to the government-wide. So if you're interested in looking at those detail numbers, they're there. Any questions on the financial statements before I move to the footnotes? Okay. On page 71 is the lease footnote. This is an addition this year with GASB 87 that was implemented. A receivable has been placed on the balance sheet. There's 2 leases. One for the 5 Points is in the Water and Sewer Fund. And then for the Harlansdale is in the governmental funds. And this gives the details of the lease, the change in inflows, and then the revenue for each one. For the 5 Points, it was 18,000, and for Harlansdale was 7,000. And on the next page, that's the payments that's going to be collected through 2043. So, and that's broken down by both principal and interest revenue that'll be recognized over the life of those leases. On page 78, that gives a little bit more detail about that prior period adjustment. It wasn't significant, but your beginning net position was adjusted, so we wanted to show you that number. Also in footnote Q, there were some subsequent events that management wanted the reader to understand. First one was in August. There was a resolution updating financial policies and procedures. In September, there was a resolution declaring the intent of the city to reimburse itself for certain project expenditures. And then October, the city has applied for additional grant funding under the American Rescue Plan. A couple schedules I wanted to point out. On page 84, actually, page 83, this is for the closed plan. If you're interested in knowing what the funded amount is, that's towards the bottom. the plan fiduciary net percentage as a percentage of the total pension liability at 22 was 90.7%. That gives several years. History. And on page 84, the contributions as a percentage of payroll, they're listed there both by dollars and as a percentage of payroll.
Is the closed plan the one we appropriated the additional 1.5 million for?
Yes,
Okay.
it is the closed plan.
So it got us that extra bump from 82 to. That got us the extra bump from 82 to 90.
Well, there's a little bit, with the closed plan, it's actually the measurement date is different than our fiscal year date. So the open TCRS plan is on the same measurement date because it's a state of Tennessee plan. It's June 30 for both. But on the closed plan, it's a December 31st measurement date. So actually, what was in the measurement for this calculation
I
was
see.
the additional contribution from the previous fiscal year.
And we made another one?
There's
we've done
been,
it a couple,
in the last
yeah.
3 years, there's been additional contributions made.
Got
So
it.
the extra $1.5 million that was for this current fiscal year '23
We'll
will
see
be in the
next year.
measurement date of 12/31/2022, which we're talking about this time next year.
Got it, okay, thank you.
Market hasn't been as kind to us this year.
No, it has, every additional contribution will be, in fact, one of the things we talked about this afternoon was the timing of our December contribution on the closed plan to make sure that we get that recorded by 12/31 because it's not a pretty calendar year.
And on page 86 and 87 is the same information for the TCRS plan. That's the open plan.
And there was no, that's an open, we didn't contribute, that wasn't what, we did nothing extra for that.
We didn't contribute extra, but we actually, on that
But-
plan, the state tells us what percentage of that covered payroll that we must contribute as the employer. And because we are starting out, new with that plan, certainly we have made all of our required contributions, and that's why we are so well-funded with the new plan. But that is using the schedule that the state has given to us.
So we do make contributions.
Yes.
We may not refer to them as extra, but we do make contributions.
Yes, and that, there is an actuarial study performed on the open plan every year, just, that's engaged by the state. We, of course, engage for the closed plan, and then the state sends us, and they tell us what our contribution must be on the open plan every year. For this new year, I believe it's 7.22%, I believe, is our contribution as an employer, and then our employees put in 5%.
And if you would like additional information, you may show up Monday at 1 PM for the Pensions and Trust Committee.
Oh, but they'll get a little something on the 13th probably too, so. yeah.
Moving on to page 105 is the schedule of expenditures of federal awards, and on 106 is the schedule of state financial assistance. These are the federal and state awards that the city had expenditures on during fiscal year 2022. Their total expenditures were $15,397,000. They passed through 159,000 of those funds through the Van Pool program, and that's to Williamson County. So that's what that amount passed through the subrecipients column is for. We audited two major programs. One is the Federal Transit Cluster. The total expenditures on there were 1.9 million. And then the American Rescue Plan. And the total on that was 1.5 million. State expenditures, those totaled 1.2 million. On page 156 is the results of our uniform guidance audit. And this nice little summary sums up pretty much our entire audit in one page. At the top is the financial statement results, unmodified opinion, and we had no financial statement findings. Those are broken up into 3 categories: material weakness, significant deficiency, or noncompliance. And then in the middle section is the federal awards results. And those findings are also broken up into those 3 categories. We had no material weaknesses or significant deficiencies. Our opinion over the 2 major programs is unmodified, but we did have a compliance finding that we are reporting, and that is included on page 157. Item 2022-001, the Franklin Transit Authority Program Review. The Federal Transit Authority came in and did a review of the Franklin Transit Authority. Their review is much more in-depth and a larger scope than what we do in the uniform guidance audit, and they issued their report, which I believe you all have seen. Some of the findings that they had overlap with the uniform guidance and apply to what we're testing as well. So some of the items that they found are also being reported as findings here.
What page is that on? Sorry.
Page 157. And those include reporting and monitoring of subrecipients. The city had previously reported the TMA group as a subrecipient. Based on their review, they indicated that the TMA group is actually a vendor. So those amounts were reported as a subrecipient in error. And the TMA group was performing a single audit based on those expenditures as a subrecipient. So the city informed TMA group that those expenditures should not be reported on their federal expenditure report. And they're not required to be audited under the uniform guidance. The van pool expenditures previously had not been reported as a subrecipient to Williamson County, and those, as I just pointed out, have now been reported as being passed through to that subrecipient. Internal controls over payroll, and we test these controls as well. There was some pay registers that it had not been documented were approved by the supervisor. Some were, some weren't. And so we've included that as well. We did test payroll this year, and we did it, all of them that we looked at were also approved. So it appears that that documentation is now occurring regularly. And also reporting awards and subawards to the Federal Registry. It's called the FFATA. If you get certain awards over a certain amount, those are required to be reported on that registry. For the COVID awards, or for certain programs related to the Federal Transit Program, and those had not been reported. They are, however, now being reported on that registry. Management has submitted a corrective action plan, which is required under the uniform guidance, and that's included on page 159. That was being implemented prior to us arriving, and we did note some of those items had been implemented during our audit. Next year, we do need to report on the status of this. Based on our current testing, we believe there'll probably be a resolved finding. And last item on page 158, we had an audit finding last year. There was an investigative report on the City of Franklin Fire Chief that's been resolved. So we just indicate that, and then the state's happy and we can move on. Any questions?
Any questions from the committee?
Thank you.
Thank you.
Very good. We appreciate it. Thank you.
Thank you.
So are we ready for item 7?
Mr. Chair,
Yes.
if it's all right, we do have a report from the auditor on the Cool Springs Conference Center, if she may
we do.
give you
I'm
a
sorry.
report on that as well.
I didn't want to skip over it. Step on your feet. Okay, in the Conference Center at Cool Springs, the city has a 50/50 joint venture with the county in the Cool Springs Conference Center, which is located in the Marriott. We also performed an audit on them, on their books. And on page 3 is our independent auditor's report. It is also unmodified. This one has also been updated for our new audit standards, so the opinion is at the top. And then going to the financial statements, on page 13 is the statement of net position. The conference center did see some recovery during fiscal year 2022. With all the COVID restrictions ending, they saw a lot more banquets and conferences come back. So their results this year were very positive. In the balance sheet, their cash increased quite a bit due to the increased activity. They do set aside some money for capital expenditure, and so that's included on the restricted for capital expenditure line item. Also have a receivable from the hotel for reimbursed expenses. And then in the payables, due to the city and the county, every month, the profit is split 50/50 with the city and the county. If they have a loss, the city and the county split that and pay it to the conference center. If there's a profit, it gets split to the city and the county, and so that's the amount that is due to them at June 30. Net position, a healthy 10.3 million. It's down a little bit from the previous year, but still in a good position. In the statement of revenue, expenses, and changes in net position on page 14, in the operating revenue, increased substantially from 1.8 million in 21 to 6.2 million. The recovery, they saw quite a bit of it starting in February of 22, so they're expecting revenue to increase in fiscal year 23 as the economy stays open. In operating expenses, with the increase in revenue, the expenses also increased. They did have some cost increases in labor. Hiring was a challenge. They did have to use contractors, and they did hand out bonuses to employees to keep employees there. Also, with inflation, there was some increases in some supplies and food costs, too. Even with those increased costs, they did have an operating income of $445,000. And then when you include other income, which is conferences that get canceled, there's a fee that they collect for that. That was $230,000. That was primarily towards the beginning of the fiscal year when there's still cancellations happening. Total income before distributions was $676,000. So very good year for them. They distributed to the city and county $829,000, which gave them a overall decrease in net position of $153,000 for the year. And on the statement of cash flows, on page 15, cash flows from your operating activities were a positive $1 million. So that's excellent compared to a decline in 21 of $561,000. Financing activities, those are the contributions from the city and county broken out from the distributions to the city and the county. So the contributions decreased significantly and the distributions increased significantly. Also, acquisition of capital assets. They're replacing some equipment, doing some bathroom renovations, some lighting, things like that. So that's what those relate to, leading to an increase in cash of $260,000. They don't have any federal funding. However, we are required by the state to do a government audit standards audit for the conference, and we had no findings related to those. So clean audit for them as well. Any questions?
If there are no questions on the audit, I do have a general question about the conference center. And it may not be the appropriate time, but I know why we originally did this, however many years ago. How long have we had the conference center?
Mid-90s.
Yeah, I think 97 is when the project was initiated.
And I think we've talked about this maybe even last year, some of the expected capital expenses coming up that are, that are looking to be pretty large, and looking at the revenues and the financial risk we have as a city. I mean, it's not significant, but also the revenues aren't, but I mean, the asset on here shows one thing, but I think the market value of the asset is probably much higher. And I wonder if there's ever been, and I'm new, so I don't know if there's been conversations in the recent past where, at what point does the market value of that property become something that the county and the city would entertain? Because there are other capital projects we have, and I think the market would support that independent of the government at this point. I'm not
Yeah.
making a push. It's a question.
We did review it actually with the county, gosh, Christine, maybe 4 or 5 years ago. And what we found as we looked at it, and it's some of it's just the unique characteristics of this property, it's very intertwined with the operations of that hotel. And because of that, its real value is to that hotel.
Right.
And so you couldn't really go and say, here's this
To the market.
asset that anybody in the market could compete with, because they're so intertwined, even though we do things that divide costs and allocate how much we pay for asset replacements and those sort of things. But it from a market standpoint, it does limit its attractiveness or its marketability. And so really what the value is less than you would think, because it's really kind of the cash value of not having to pay the city and county that profit, or that share of the profit at the end when it's positive, which it's been, 22 out of 25 years, something like that. So it's kind of, when you factor that in, the number is much lower than you might think.
Understood.
And what is really kind of the bricks and mortar of it, you would think would be worth, because it's an attractive property at a good location, and it as this shows, it stays pretty active and is, by and large, does well. And most of these, in most communities, are kind of loss leaders for communities. You're putting money in to keep them whole, but you see other benefits to the
Right.
community. We're in a case where most of the time, it generates at least some positive cash flow back to city and county. That market has changed over time. There are more options than people have that they didn't have before, but we still remain in a pretty good spot competitively. So I think it's the kind of thing you continue to keep an eye on. You also see if there are things that would be of benefit to that hotelier that might be a point at which you look at a change in that relationship, but you'd almost need something
From them,
to kind
really.
of spur that.
Yeah.
Yeah, that it makes sense for them to take a different role. And I don't know what that would be exactly, but I think that would, you'd almost have something like that kind of changes how they view it and what additional opportunities they might see from taking more full control of the asset, and then buy the city and county out.
Yeah, again, that's good history, I think, for us to hear.
There's sort of broad brush.
Yeah,
There's
no,
more
it's
to
good.
it. But we did spend a good amount of time looking at it with the county and asking those questions. I don't know, Christine may have some other insights too.
And I think Eric did a great job of explaining what happened 4 to 5 years ago, but certainly the intertwined nature, they may be two separate parcels, but for operational purposes, it is one mechanical system. And that's something actually we're going to talk about here in a few minutes,
Yeah.
is about the chillers. It's one chiller system, there's one fire suppression system for the whole, there's certainly one kitchen, there's one laundry, there's really no way to separate the conference center from the hotel without, the hotel would not be able to even operate. So it was billed as one mechanical system. And in many ways, it's been an advantage because we do allocate costs. And that's something we do have one manager. They have an incentive to fill that conference center because it also brings rooms and people buy food. And there is a natural incentive in how this is operated. So we are an envy of towns who have to subsidize their conference center with annual tax revenues. We have rarely done that with this facility, but it is a pretty in-depth conversation, like you're just initiating about what else could that be?
And I'm not trying to initiate necessarily a further
It's a
conversation.
good question.
But I think
We've asked it too.
as people, as Cool Springs goes vertical as well, and the hotel, that, and the building gets older, and you just, I think we should be open to those conversations if they come up. I mean, I'm not saying we, initiate them, but we've got a lot of capital projects, and sounds like we've got a little bit of risk, but I didn't know the 22 out of 25 year figure.
It's something
That's
like that,
pretty.
yeah,
That's
it's-
pretty strong.
There's
Really impressive.
there's only been for full years. The building opened the center opened in '99. There's only been 2 years, fiscal years, in which it had to be subsidized by the two owners, and one of the was during the recession of '8 and '9, and then of course fiscal '21
Yeah,
was
and then
the other.
I think the startup year was
Yes.
also a net.
But it wasn't a
but it
full
was
year.
Yeah, it wasn't a full year, yeah.
That's
The other thing to throw out, just the other flip side of the discussion, is one of the things we hear from the Convention and Visitors Bureau is we're missing a lot of business because we don't have the size facility. Again, the market's changing and competing, that kind of thing. And so they've said, boy, there's a lot of business that it's just not big enough to accommodate. And, is that something that gets met through the market or through an expansion there, or what? These are just things that we hear from that perspective, because they just see things they can't accommodate because we just don't have the size and scale at our existing center. They end up elsewhere. So it's out there. I mean, it's not the only way to meet that need in the market, but it's something we hear from them that you just, if you haven't heard that, it's out there as well. It's sort of a flip side to that discussion.
And also, we've had maybe limited discussion with the county if they were interested in purchasing another half, the city's half.
The same question.
Yes.
Okay, well, I'm no. Hey, listen, I'm no Captain Obvious, but that sounds like two parties. Anyway, I'm not. We don't need to.
Well, but that is part of this. But it does come up, and it's come up several times in the last few years. And I do remember one particular alderman would ask that pretty frequently. So, and I don't know where we went with that. I don't know who we talked to at the county, and the county, I know they probably don't remember who they talked to here, if they did talk to anyone here. But, yeah, there's interest.
Okay.
Any other reports? Let me fold up a few. There we go. How about then, report on we're ready for state standardized charts of accounts for municipalities for fiscal year 2023.
Well, this item is really to we thought the timing was appropriate, as we heard from our auditor. And I'd like to give you just a little bit of background, something that the state comptroller's office is planning to implement for the fiscal '23 audit. This will be something that we'll hear about this time next year. But about 8 or 9 years ago, the comptroller's office had a proposal to implement a required chart of accounts for all cities in the state of Tennessee. And while I did not work at this current city 8 years ago, I've been here six years, January the 1st. I was working in Tennessee at the time and was very familiar with what that process was. And certainly my predecessor here was also very familiar with that proposal. And at that time, the comptroller's office wanted to require all cities in the state of Tennessee to what it sounds like just a an exercise in changing accounting charting was really a massive overhaul for all cities and counties, or cities in Tennessee. Counties have had a standardized chart of accounts for many years, as well as school districts. But what was proposed 8 or 9 years ago really would have had a significant impact on cities that were not the Big Four in Tennessee. It was really looking at a Big Four metropolitan-type city accounting structure and pushing that down to all the other cities. And one of the examples at that time that really concerned me was that certainly cities who are not one of the Big Four in Tennessee have a combined water and sewer utility. If you have water and sewer, and if you have debt, it is supported by the combined water and sewer pledge. And at that time, the comptroller's office was going to require you to separate that the way Nashville has a separate water fund credit sewer, but they're very large, and you can do that when you're a very large scale. And that was just one example of some significant concerns many years ago. And the comptroller at that time did some, took the comments that were being provided, especially by those of us who weren't the Big Four, stepped back and decided, we'll put this on the shelf. And because what they really were wanting to do was they wanted to be able to, and they still want to be able to compare operations of cities across Tennessee and try to do analysis and see how we compare, such as our water and sewer systems, how we compare sanitation services, how much it costs us to provide public safety services, things like that. But they did take our comments, they stood back, and they have come back with what they call is the same proposal, but it is certainly different than it was 8 or 9 years ago. They still do want to be able to do analysis based on a standardized chart of accounts for cities. But it is not required that we have to implement a new financial system. We do not have to do anything with our debt covenants. It will require a couple of things. It will be requiring that once an audit is completed, that our auditor will actually be crosswalking into a uniform chart of accounts. They have an online system set up in which our results will be put into a state system by the auditor, who will sign off that the auditor has performed the tests on that reporting. And that information will be used to compare. And it'll be made, and from what I understand, that will become public information. Certainly now our audits are on not only the city's website, but they're listed on the county or the comptroller's website. So this information will eventually be available to perhaps, I think of think tanks, different organizations who like to study this type of information. Cities in Tennessee, we all operate a little differently. I'm not quite sure if what those results will be, because some cities perhaps offer fire services, some cities don't offer fire services, some cities have schools, some cities do not have schools. So when you try to compare all of these, it's going to be something to see what the comparisons look like. However, it is in the comptroller's purview to require this is actually going to be part of the audit process, that they're allowed to put that into place. So, as I've reviewed, and I've talked to the state auditor about this myself, because it's not the same proposals a few years ago, there will be some more work on the audit. There will probably be additional some audit expense, because it's going to take some more labor hours for an auditor to comply these steps. However, the most important thing is it does not require us to implement new systems. It doesn't require us to do anything which would put our debt covenants in any sort of jeopardy. And it's going to happen, and we are aware, and we'll certainly comply. But it is more of a reporting. It is a reporting standard rather than something that we have to change on the front end of our accounting system. So I've heard some estimates on what the cost for additional audit services could be. However, I think we'll have to see how that actually works out, because from what I observe, I think our auditors are having a hard time finding accountants the same way we are. So some estimates could be based on labor rates that are maybe a couple years old, and those have certainly moved as it's harder and harder to find people who want to become accountants. So we'll have to come back with you on how that expense. But I don't think it's a significant expense, but certainly I don't know exactly. I'm not going to say that there's not going to be an expense, because there should be some expense to comply with this regulation. But everyone in Tennessee will have this. This is not singling us out by any means. Mike, do you have anything from your side to add?
No, I was just going to say that the state did put the methodology out on their website, so we actually have downloaded that, and we're thinking about actually taking the 2022 data and trying to see how it does crosswalk with the state's requirement. So we're actually taking a few steps to just see how easily it does crosswalk, because the reason we had our own separate chart of accounts is because there are things in our city that the state doesn't necessarily have on theirs. An in lieu of parkland fund, they don't have that on their standard chart of accounts, but we know we have a special revenue fund of in lieu of parkland. So in essence, that's why we have one different, is because we have certain things that they don't have on that.
And there's a few other examples too. So it's keeping this as a reporting change is better for us than it would be requiring us to change our accounting on the front end, because that would be a whole different. You'd be hearing much different from us if the proposal from a few years ago was still in place.
Any questions? Then let's go to item 8, report on the American Rescue Plan Act.
Wanted to just touch base with the committee a little bit on where we are with rescue plan dollars, and there have been a few things evolved. We generally plan to report to you as we get closer to our reporting requirements with the federal government, but there has been some things evolving there. So we wanted to walk through those. Some things have been completed. A couple projects have reached their completion, so we have a more sense of what those full costs are. And some things have evolved for us in terms of additional, what we look at as opportunities. One relates to the conference center that we'd like to get on your radar screen and get any feedback you have. We're looking at what fits in agendas between now and into January. Bring this to the full board as well, just so that they're informed. Alderman Baggett had asked a question, and it triggered in our minds, it'd be good to just share this with the committee as a whole and get any other feedback or questions you have. But we're moving along well, and we've identified what we think are good, impactful projects that also fit well within the parameters that we've been given, and are, sort of achieve the goals, but also do it in a way that we're not making it overly complicated on ourselves. That's the best way I think I can say it. Let Christine and Mike maybe comment a little bit, and we'll walk through what we've got here and maybe some things that might have changed since we talked about this a few months ago. So take away, Christine.
Well, thank you. And of course, the American Rescue Act has two different tranches of funds with two different sets of rules going through two different aspects of government to reach us here at the City of Franklin. And this is the program that I call the direct appropriation. We have already received the money from the federal government. We have U.S. Treasury guidelines. We've received several versions of Treasury guidelines to implement those, and that is the $9.2 million program.
And Franklin is somewhat unique compared to most cities in the state in that we got that funding directly. The vast majority of cities in the state are getting those through their counties and then getting their dollars. So we did get ours a little quicker. I think it's because we're an entitlement community in CDBG. So we already have sort of an existing direct relationship with the federal government. So that sort of cut out the middleman of the county and came to us, and really I think is in a kind of they separated those dollars into those different, an entitlement community and non-entitlement communities. So we're in a little bit different boat than a lot of the other communities and the other cities in Williamson County, certainly.
So we do have we have received the $9.2 million. We received that in two pieces, but we do have those funds. We have spent through the end of November $1.8 million, and And so most of that was really split, not in half, but we did do some premium pay in fiscal year '22 to eligible employees. We also had employees who missed work time because of having COVID-19, and that we were able to, we recorded that leave time into a separate code for leave for those employees. We also had some expenses in the areas that we had lost revenue from hotel motel tax due to the shutdown, and we paid expenses that were related to the hotel motel activities, as well as to try to help the tourist industry, the hospitality industry. The most recent project was the parking garage counters for the 2nd and 4th Avenue garages. That improves the hospitality tourism experience for downtown, and that was paid for from that program. We do have commitments. We have one commitment that the Board of Mayor and Aldermen approved back in August of this year to the Franklin Housing Authority for utility work for, I believe it's 3 existing communities here that are located here in Franklin that needed water and sewer, I believe even some drainage work that qualify. That's a $1 million program. We will be reimbursing Franklin Housing. They have not submitted a reimbursement request yet, but we have given them that requirement for submitting reimbursement, and they have to actually, they do have to have that work done, completed in the timeline of the program as a subrecipient from us for $1 million.
And the board approved that. We've done a specific agreement with Franklin Housing Authority, and those are all affordable housing unit impacted projects as well.
So that fit really well into the rules of the U.S. Treasury for the project with Franklin Housing Authority that the board approved. We also are in the design phase for water and sewer improvements. That is Lewisburg and South Margin, and that we'll have more information about that project. Our water and sewer staff advised us, I believe, after the new year, they'll have more information about that, but they are working in design now.
Yeah, they're in design, and we expect to bid that the first half of next year. And again, that number, I think, is higher than what you probably saw last time we did this report. I think we've bumped that up to about an estimate of a $4 million project, and that's helping us upgrade and improve aging infrastructure. And we're also doing some looping of the water system, too, that will improve reliability there as well.
And so we have a couple of more in proposed areas, and this is something that we'll be able to, we are planning to come back to at a board work session in the new year. But we do maintain a working relationship with the management of the conference center. And something that we have been working with them on is especially with that we have been fortunate to have funded capital improvements and maintenance at the center with proceeds from net revenues of the operations for many years since it opened in '99. But we have had 3 fiscal years that were impacted by the losses, and including a total shutdown for a good part of those parts of those 3 fiscal years. And so we have not accumulated the balances in that fund to pay for capital improvements that we would have without, if we had been in full operation for those 3 fiscal years. There are a couple of needs coming up in calendar year '24, which does fit within the timing of the grant program. If you'll recall, these funds must be under contract by the end of calendar '24. They must be spent by the end of calendar '26. That's part of the rules. And of course, one allowable use is for negative economic impacts. Certainly, the conference center operation was negatively impacted by the pandemic, as well as the tourism hospitality industry is a targeted industry there. But there are 2 different projects in calendar year '24 that we have talked to conference center management as well as county management to get a better understanding of what those 2 projects are. The first one is that we have chillers that will be 25 years old by calendar year '24. And these chillers have been maintained over the years. They have been overhauled. but we are being advised that the useful life of those 25-year-old chillers, it's at the replacement stage. And certainly you cannot operate that hotel and the conference center without those chillers. And they are one set of chillers for the entire building. The conference center is allocated 30% of the costs of those chillers. When anything is done, major maintenance, the conference center is allocated 30% of that expense. So we are looking toward a replacement of those chillers here in calendar year '24 at a 30% of the total cost to be shared with the balance with the hotel ownership. There's also what's called a soft goods renovation of the conference center, which was last done around 2015. And that is, it's painting, it is air walls, it is carpeting, it's got some technology components to it. It's much more what you see, probably perhaps, than some of these other works that we've been doing with, we've put in new fire suppression and things, some behind the scenes things, but this is actually what you see when you go over for events there. But 2024 is when that is, Conference Center Management's projecting to have the next soft goods renovation to be done. Certainly, it has to be planned pretty far in advance because they have to pull that conference center down and take it offline for a not too long of a period of time, but they do have to plan. You wouldn't just do this 2 or 3 months from now. They really need to plan a year and a half or so to be able to accommodate such a renovation. And we are projecting at this point with some contingencies that each owner, ourselves and the county as our shared owner, would be looking at approximately $1.2 million to do all this work for each of us as shared owners in 2024. And we are both looking at, both of us do view that the grant funds would be eligible. The county has a grant allocation as well as the city. The county has a larger amount than the city does, but certainly they have lots of potential uses as well. So the county leadership has indicated that they are considering this use of funds for their part, because certainly the conference center would have had, when the soft goods renovation was done at this point about 8 to 9 years before, the reserve fund had generated enough funds to pay for that work. But in essence, because we are having an aging building that has more mechanical needs, as well as we had 3 years in which we did not see the potential of the operations of the center, we are looking to need to put money from the two owners, whether in this case potentially from a grant program that really, part of the grant program is to help what happened in 2020, in 2021, to help those get back on their feet. So we did want to share that with you, that was something that could be used for this fund in the time period in which it should be used.
So these improvements are a little more in the context of building systems. When we did it 8 years ago or so, 8 or 9 years ago, those did have a lot of soft goods, and it was also more of a remodel of how the facility looked and operated in that way. So it was more visible to the public, to customers. This is a little more on the building system side, which has a lot of expense to it. And then the soft goods are just, you need that on a certain cycle, and we're at that point in the cycle. 8 years ago, we had the reserves built up, and we were able to accommodate it all within what had happened there. As Christine said, this hit fiscal 20, fiscal 21, and almost all of fiscal 21 and part of fiscal 22 all had impacts. So those are times that we not only didn't generate hotel motel tax, we didn't generate that, what we usually saw as positive cash flow back to city and county, and that carve out that we had to go to the reserve fund didn't happen because they weren't netting positive cash flow from the operations. So we are in that position. It's exactly what I think these funds are intended for, to help fill gaps that were created by the economic hardship. So I think it's really, it's a blessing that that's here to help apply here. We met jointly with the the conference center management and hotel management there from the Marriott Group, and they they went through items with us in the county and the timing of those and how those could fit in the timing that the American Rescue Plan requires. So we're comfortable. This checks those boxes, and it is a way for us to offset that economic impact and keep this center competitive and viable going forward. So it helps us both in the impact that we achieve, but also how we do continue to be viable and recover, because that recovery still continues in this area of the local economy. So I think it's a really good opportunity. I'm glad we were able to kind of identify it together. County is doing the same thing we're doing about due diligence and looking at how this fits in to the allocations we have. But we got really a positive feeling from that discussion that was a good path forward for both of us. So this is really a first public discussion on it. We told them we'd have this public discussion here in December heading into January. And so I know they're working it too, and likely there'll be some discussion at County Commission in the first part of next year on this same topic, so.
Any questions? Yes.
Christine, would you just do me a favor? I'm seeing here on 8, just for public, if we're putting in 1.2 million, county's putting in 1.2 million,
Yes.
how much is the hotel property management group putting in? Are they putting in any, or is it a 30%?
Well, this is 30% for the chillers, because that's the shared mechanical system. And then it's the soft goods renovation is what is allocated to the space of the conference center. So it,
Entirely a conference center expense.
yes.
Okay.
Yes, we're not paying for anything on the hotel side.
Right.
The soft goods is what's needed on our property, and then the chillers is the allocated, where the hotel is 70 and the conference center is 30%.
I guess my bigger question is the hotel property group, are they putting in any money into the conference center improvements, or is it just solely us and the county?
The two owners, as well as our fund, the reserve account that comes from net operations, that is what funds the improvements at the conference center.
Okay.
So the hotel owners pay on the hotel side, and then if there is something that is to be allocated, there's allocations, and then the expense that is put on the hotel's books, and then there's expense on the conference center, such as the chiller would actually be, if a bill's $10,000, it would be $3,000 on the books of the conference center and $7,000 on the books of the hotel, because you can't really split that mechanical system up between the two.
But the soft goods is a owner responsibility.
Yes.
It's not something the
Yes.
the hotel pays for.
No, correct.
Thank you.
Mr. Chair,
Yes.
maybe I did open up a little bit of a can. Because I think we really do. I think, so the first question is, are these improvements, is this just a routine, like, maintenance schedule? And so if it's not that they're failing necessarily, it's just that this is the time it's needed and they could start failing, and that's more, I guess, would a year delay in doing this, would that cause significant disruption in the overall operations of the business of that conference center?
Well, the approach we've taken on the mechanical side, whether it be the chillers, the fire suppression, the other back system, certainly, nothing has been replaced in my experience, because I'm the one that's involved with those directly in those conversations. We've never just replaced simply because it said it was time to replace. We have done we do routine maintenance, then we do some repairs that are more than routine maintenance. However, there have been, in my 6 years, there have been some mechanical systems that, while they didn't actually fail, the repairs were getting such that we just couldn't sustain just trying to keep repairing them. That's what we've had with some of the other mechanical systems as they've got past 20 years old. We even had we even had a major dishwasher that did that same thing. Even though we don't think about a dishwasher in the back, it was just down so much that it was time to replace it.
Yeah.
So on the chiller, the risk is that if we get to the point that a 25-year or 27-year-old chiller chillers just go down. Certainly, parts are getting harder because they're older, and the recommended replacement was a few years before. That building can't operate if we don't have the chillers.
Sure.
The whole complex can't operate. So,
I guess I'm just, so this is because we're, in this, the asset value, I guess on the financials is depreciated amount. I'm no accountant. I don't know.
well, for the book values, we actually do straight line depreciation on what it cost to build that building.
So $9 million is
Not
what's
back,
on.
and we've been doing depreciation since then,
So it was more
and we've
than
done
that.
some additions, certainly we've done some capital expenses that extended the life of the building, such as when you buy a new chiller, you can depreciate that over a period of time. So this is, what's on the books for the value of the conference center was the costs from when it was put into service back in the late 90s.
Okay, so I guess.
It's not a market
Yeah, no, it's not a
value.
market value, of course. This is $2.4 million between the two of us, county and then so even, it's a substantial sum. I just looked, we own the whole entire front parking lot of that space too, which parking in Cool Springs pretty valuable, especially and our new zoning ordinance would require buildings up to the front of the street, new since this was built. Would require, I think the property's probably more valuable than because of the parking. And I guess I'm not saying I don't want to do this, but I think it's a great place to cut. It's free. It's not free money, but it's money that's we haven't had budgeted. I just wonder if I wonder what the county's opinion is of revisiting that if it's been 5 years, and maybe any appetite from the conference center, because this is a lot of, in the payback, if we're getting $250,000, $300,000, to 4-year payback on this investment, that we could use this money somewhere else if we don't use it for this. So,
Well, wait just a minute, you've got to remember that this money is coming from the PRA.
that's right, but we
So-
could use this $1.2 million for something else that we're gonna spend cash for. You see what I'm saying? Our sewer and water fund, the Lewisburg Pike improvements, we're not gonna have to use our funds because we're using this. And so likewise, we could use this $1.2 million for something else that we don't have to use our funds for. So I know it's kind of like funny, but it could be used for something that we are budgeting for. And this is a budgeting thing we have to do too. So I'm not saying,
Yeah.
that's this too, right? I guess the bigger question is getting some framework on the value of the property, or of the value of us continuing to do this and continue to have this. That's a lot of money, $2.4 million between the two of us. The payback on that, how much we make in a year?
We received a little over
300.
400,000.
So 3 or 4 year payback.
Yeah.
Wait, let's also put some other things in the Lewisburg and I can't say, the South Margin, yeah. I was
Is it there?
trying to
Yeah.
think of South Margin. That is going to help how many people in this whole city? Give me a break. Give me a break. I mean, really. It's needed, but it's going to help truly the people that live right there. That's all. That is all it's going to help. So,
And if we didn't have this, we would have to spend our own money to do it
Yeah.
because we're obligated because we provide them sewer. I guess what I'm saying is,
well,
Yes,
that
it's
would
free.
But that
It's-
would come out of the water and sewer enterprise funds.
One of the things, we've got a limitation on where we can put the infrastructure is very narrow
Okay.
from the American Rescue Plan. It's water, sewer, broadband, essentially. We're trying to find the infrastructure that makes the most sense. This is an area we'd be focused on with what we call rate-funded capital. So it does provide some relief on that. And we spend at a pretty significant rate on that. This does give us some relief there, and it is a project we would be looking at doing regardless of this funding, so it does help us
when are we planning on doing that? Calendar year 24?
in terms of,
The chillers and everything, 24 is what it says.
It's-
That's what
yeah,
we've talked about
right.
with the The conference center is
Okay.
is calendar 24.
Okay, so I guess what I think maybe is identifying kind of what, maybe circling with the county and saying, we got this big expense coming up, we're looking at our ARPA funds. What would it look like to get a valuation on this property? We did it 5 years ago. It's not gonna stall the chill, I mean, we
Yeah, I
could,
think you gotta move forward.
we could vote on this in 9 months, decide not to do it because we have, this piece of property's worth $20 million. I don't know, $10 million, whatever it is. I don't think that we can leave it as a placeholder in here because we're not gonna spend it till 2024, right?
Well, what we are looking at, how we are looking at are what are allowable uses. That's why we categorize what's been spent, what's in the middle, the outstanding, and then we've kind of got proposed at the bottom, because we do know that
When are we gonna spend the 1.2,
that's looking at calendar year 24.
right? So if we leave it in there,
And that's the
And we have
column that's
the-
being
That's it, getting it
discussed.
done.
Yeah.
Getting it finished.
where it's going to be spent.
Well, the general guidelines are you gotta commit by 24, spend it by 26.
Okay.
But this is one, based on what the operator told us, they need in calendar 24, given age of the systems and what they are seeing. And that's a request that really happened unbeknownst to the American Rescue Plan. They brought it to us and we said, this looks like a rescue plan option. Let's explore that. We raised that to the county. They said, good idea.
Yeah.
And that's really where we are in the process.
Can we leave this in here? Can we wait 6 months? We're not gonna spend anything in 6 months on this.
That was not.
Probably not, no, yeah.
So let's leave it in there as a placeholder, but can we ask these other questions just, and if it goes nowhere with the county, if it goes nowhere else, then it's in there, and that's what we're gonna use it for. If we, again, I think we might be surprised, possibly, we may not be, and that's fine, but we're not gonna allocate this money to something else, but ask the questions, would love to spend this money on it if we continue operating the conference center. But if we get a shock surprise kind of answer from the county wants to sell it apparently. If we've wanted, is that okay to just leave it here and then ask those questions?
Yeah, I would definitely reserve it.
Reserve
for
it,
this
that's what I'm
purpose,
saying. Yeah,
is
let's
the way I would
reserve it
look
for
at
this
it, because I think it's coming. Even if you got on the same page and you're able to do this, there's gonna be some lead time to get to there.
Understood.
To make the property marketable, you may need to deal with this anyway. You know, there's lots of pieces and parts to that. So I would reserve it and just have those, I don't think there's any harm in having those discussions, see where that's at.
It may not go anywhere, and that's fine too.
We do have an operating agreement with Chartwell that I think runs through 27. Am I remember that right? So that's a factor too. That might be a
Yeah.
jumping on or jumping off point, however you look at
Understood.
it.
No, that's
So
good enough.
those are all things to think about that take you probably a little, that 27, if that is a meaningful time, that takes you outside of the framework of the American Rescue dollars.
Yeah.
But still may not be a bad idea. It's still a good idea to have the conversation and just see where the county's head is at, and then also see how different is it from what we saw 5 years ago, where there really was like one primary
Yeah.
option to spin it off.
Understood. Thank you. I appreciate the discussion. I've
Yep.
learned a lot. Thank you.
So the follow-up discussion then is with the county as to whether or not they're looking at or interested in purchasing our half, or whether they're interested in selling their half.
Or looking at, what I took it as more as,
Okay.
do we want to look at this becoming a private entity and not being a publicly owned facility anymore? What
Well,
does
I
that
mean-
look like?
Okay.
So I mean, it's probably all of those as the continuum, right?
All right, if they buy, then it is private with us. We
It's
would
no
no,
longer-
we,
yeah.
yeah, we would no longer own
Yeah,
anything.
yeah.
Okay. So that's my interest, is whether or not the city is or is not. I mean, the county, we live in Williamson County, but that's not necessarily high on my priority list as to what they're wanting to do, especially if they're looking to maintain and retain ownership in their portion of it, because I don't think they've had we've had the discussion before, and I don't know where it went, but I know that there wasn't a great deal of interest in the county purchasing our portion of the ownership of that.
8 acres in Cool Springs is not what it was 5 years ago. And regardless, and I'm telling you, that building, the dirt is worth more than the
In the
structure.
building, that's right.
And I think we need to think about that, and for the taxpayers, this market's gone crazy, and 5 years is a while. It's worth at least visiting it, and then if there's no rush, we leave this as a placeholder and have that conversation over the next 6 months, and then whenever it is time to initiate the purchasing, process for the chiller, and that's kind of the deadline, and then if it fizzles out and there's the 2027 is a hard, easy break, I just want to have the conversations.
Any other questions or comments on the ARPA?
I believe we
Plan.
did want to just update you, and Mike, you could talk about the next report that we make to the federal government. And we do have a requirement to make periodic reports.
With us being a recipient of under 10 million, we actually file with the federal government annually. So we did file a report in April of 2022. So we actually will be filing our next report in April of 2023.
The other thing that's happened since we last did this review is we did submit in a different group of projects in the water and sewer realm. There's a TDEC, American Rescue Plan dollars, and we talked to that with the board as a whole. And that's where there's a 35% local match and 65% coming from TDEC ARPA dollars. We've submitted our projects. It's inclusive of the Liberty Hills stream restoration project. You remember we spent a little bit of time on that one, and some other water and sewer improvements that we think are a good fit, a pump station upgrade and some other more in the line of maintenance and those areas. So those have been submitted. We're waiting to hear back that those are acceptable. Everything we know, we believe they will be. We'd be surprised if there was anything, because we've kind of checked as we went through these to see where those are. We'll get feedback on that piece. And then there's likely to be another round of those, because there's a good chance other communities and other utilities throughout the state, not all of them, were in a position to have that match and utilize those funds. So we might have another crack at those dollars as well. And even things that we do on a regular basis in terms of leak detection and inflow improvements for the sewer side can be paid for from that. So those are the kind of things that we really are kind of at the ready to look at if there's other funding opportunities. So we'll keep you informed as we hear feedback from TDEC on what we submitted initially, and then if there's another round, which we know there will be, what that looks like and what we might have to fit into that. So.
And we did disclose that grant application on page 79 of the audit report when Jennifer was walking through some highlights of subsequent events. That was a disclosure that we made of applying for the additional TDEC ARPA funds. And so it's high level, but our readers of our financial report will be able to see that we have applied for those funds on page 79. And we've received word, and I contacted our departments this morning. The next step on the TDEC ARPA is TDEC's holding some workshops on the procurement rules for the program, and hopefully our project managers will participate in those workshops while our applications are under review by the state, so that once we receive what we would anticipate allowing us to move forward, we can go do these workshops and learn on how to do the procurement. So we have that coming up, and then in the new year, we anticipate receiving guidance on that competitive grant program of additional funds that, as Eric was relating, may be available for us to apply for. So we're doing our best to keep up with all the rules of these two programs and what steps are next, and keeping everybody informed. So we appreciate you all sticking with us, because we're just doing our best to follow all these rules and make sure that we give you the most complete information that we can find.
Any other questions or comments? Then let's go to monthly reports. Michael, Margaret. Margaret?
Me. I only have two things to highlight. this afternoon. We'll start with sales tax. For September sales that we received in November, it was $5 million. But all 3 months for the fiscal year have been over 4.5 million. So we're off to a good start for the fiscal year. And then also hotel motel tax, it is up by 17.2% over last year. So that's a great start as well, seeing that everybody's coming back.
And we've been doing some comparison, CVB in particular, not really looking at last year, but looking at 2019, and sort of indexing that. And that's favorable compared to 19 as well, so that's good to hear.
Any questions or comments of Margaret?
Nope.
Anything else to come before the committee? Which I guess comes under other business.
I will throw one thing out there, Mr. Chair.
All right?
Since we are talking about, Christine, as you were bringing about keeping a close eye on those state and federal grants and any additional funding that might come that we might be able to apply for, anything like that. I know that I've had some communication recently with staff and with some locals regarding the Long Lane overpass. And I know that is moving forward, that we're in the process of doing engineering, we're in the process of gaining
right-of-way.
right-of-way access as well. There's a lot of competing priorities that we've discussed as well as on our capital improvement list. But as we look at that, as that goes over Interstate 65, if there is any other funding that's available for roads such as that's at the top of the list right now, or any other proposed roads that we may have where we might be able to gain access to state and federal funds, this is the committee to make that comment and to present it to you. So any other thoughts?
Well, that is certainly something that we've been also thinking about for when we get the rules on the infrastructure, the federal infrastructure program.
There's a lot of
Good point.
That-
unknowns on what
But
might
that,
apply.
but that is indeed something that, when we get the rules of that program and start pulling it apart, that we definitely always look at our existing capital program, but then we also look at some of these other needs that perhaps would fit within the rules of programs. So
Do we have that
that,
allocation yet?
no.
We don't know. I mean, it could be
We don't know money,
50
we don't
cents or-
know.
We don't know rules.
We don't know rules.
It's an
Just-
unknown right
yeah,
now.
what's the
And we're not sure
timeframe on
how
that?
it'll be, if it'll even be allocated on the community basis, or if it'll be competitive or
We're still
project-driven.
waiting.
Yeah, we don't know. So we're waiting to see what that looks like.
So we're waiting with bated breath
Yeah.
until what date or what month, do we know?
I haven't heard a
I don't
release
know. I
date.
don't
know.
We heard some broad things several months ago, but all rules are still being made, so we're not sure.
But as we
And
look, oh, go ahead.
Oh, and what happened with the ARPA program is we had interim rules come out.
Yeah.
And then we went through interim rules before the final rules, which most of the interim rules stayed, but then they changed some things also in the final rules. So that was the procedure with ARPA, was to give us interim rules to start with. And I don't know if that will be the same case with this program, but
We always try to advocate for more block grants than specific things, because those have more strings attached to them, so it's always nice to get more of a broader allocation and then work within that framework, but we don't know what we'll see. ARPA was far more restricted in specific in nature than a block grant. So we'll see what we get out of this program.
Does our lobbyist that we employ or we contract with, do they work on the federal? They just work at the state?
They really work at the state level.
State
yeah,
level,
yeah.
okay.
We also, with our professional organization, the Government Finance Officers Association, we actually have, there's a group actually in DC that helps give us a lot of access, and certainly we have used a lot of their resources to help keep us, and we pass that along to our chain here in Tennessee as well, and our city managers and everyone.
we
So
do the same.
I do believe we will hear when the rules do come out, but I think a lot of the, could be the same Treasury people are working on all the ARPA rules that are working on, I don't know exactly, but there will be a new set of rules for the infrastructure program, and we appreciate you keeping those capital projects in your thoughts, because we certainly we will bring those rules to you as soon as we know what they are.
Look forward to it.
You like a new set of rules, don't you?
There you go. Let me know how to play.
Any other items to come before the committee?
I do appreciate this committee in your service in 2022. This is our last committee meeting for the year, and we do look forward to hopefully seeing you back on January the 12th for our first meeting of the new year.
Mr. Chair, since we're excited for budget season to start, I'll make a motion to adjourn.
Proper motion, do I have a second?
Second.
All in favor indicate by saying aye.
Aye.
Any opposed? Hearing none, we are adjourned.